I have a question for you. Which is the single most important chart in the world? The chart that has to be watched by a hawk, by anybody that has to do with markets, finance, investing, trading, money managing, anybody that has to do with markets whatsoever. Which is this chart that is the single most important chart in the world? It has been very important for the last 47 years. 47 years. Can you imagine this? This chart has been the single most important thing for the last 47 years. This chart, whether it goes up or down, can predict major inflection points for inflation or deflation. Inflation shocks, deflation shocks, commodity prices going up, commodity prices going down, major valuations of currencies going up or down. Which is this chart? If you have guessed that this chart is the US dollar index, you have guessed right. So, what is the dollar index? Well, the dollar index is a basket of currencies measured against the US dollar, meaning that several big currencies of major nations are measured against the US dollar, which is the world reserve currency. What I have in this basket is the euro. It takes 50% of the basket. It is disproportionately high part of the basket. Then you have the Japanese yen, about 13-14%. You have the Canadian dollar, the British pound, you have the Swiss franc, you have the Swedish krona. So all those currencies measured against the US dollar creates a negative correlation between those currencies in the basket against the US dollar, meaning that whenever the US dollar is gaining strength against those currencies that are falling down, the US dollar is going up. But when those currencies are going up in value against US dollar, the US dollar goes down. So this is pretty much what the US dollar index shows us, is the strength of this basket of currencies against the world reserve currency, the US dollar. So if you want to know what is going to happen with the dollar index, you have to analyze the currencies in the basket in relation to the dollar. Now, in my case, what I'm going to do is I'm going to look only at the euro-dollar pair because it has a very strong correlation and a very well confirmed channel that I can use to tell whether the euro has bottomed or topped. And this is a channel that dates back to 1971. This is the Nixon shock, where Nixon linked all fiat currencies to gold. So not only they are now fiat currencies, but they are unbacked fiat currencies. They're not backed by anything. There is no gold backing them up. The central banks can print as much money as they can. Yet the central banks still keep their reserves in gold. So yeah, officially we are off the gold standard, but unofficially we are still on the gold standard because the central banks are still using gold as reserves. So this is 1971, the Nixon shock, and then we have a big rally in the euro from 0.53 to 1.14. This is January 1980. So this is the top of gold and silver, and this is where the big crisis of the dollar ends by Volcker actually rising interest rates to 20%, saving the dollar, and the dollar actually starts gaining value again, and you have the correction in the euro back down to 0.55. Then you have the big bull market in the euro from 1985 to 1995. So this is 10 years of bull market for the euro to 1.44. Then you have the correction of the middle of this cycle that we have right now to 0.81, and another bull market where the gold actually started going up together with silver, and where the dollar actually topped in 2000. And you have this huge move to the upside in the euro to 1.60, so it practically doubled from this level right here against the dollar. And then you have the crisis of 08 and the deflation shock, this very swift move to the downside. And since then, the euro has been in a downtrend. It is a very apparent downtrend and a very well-defined channel. We already reached the top of the channel. The final resistance is at 1.283. We most probably have already topped, and now we are making our way lower. In the next month, 2, 3, 5, we will most probably start going back down to support of this downtrend or to the support of this uptrend of the long-term channel. Both right now are situated at around 0.94, which is below 1-to-1 with the dollar. So this is not something like a groundbreaking prediction of the dollar being more expensive than the euro, because this has happened in history many times. You know, we spent some time in 2001, 2002. We also spent a lot of time back in the 80s and 70s. So this is nothing unusual. We also had in 1989. So we are going back there. And the reason is the dollar index chart. Unfortunately, TradingView has deleted my long-term chart for dollar index. I had a huge move to the upside, and I had a lot more data back to the past for the dollar index and a very beautiful chart. Unfortunately, when I tried to make this video, it's gone. And if anybody watching this video can find the chart of the dollar index with the additional data right here, please link it in the comment section below. Please, I'll be very grateful. I need that chart. So what we have is that we have in 1992 a very similar action to what happened in 2008. You had series of bottoms, then you have the ultimate bottom, a series of bottoms, then you have the ultimate bottom, and you have a rally that is next to the previous top. What you have is a rally and then another rally to the previous top, and then you have the change in behavior that happens right here in 2011, where the top of gold and silver happens, and you have the bottom of the dollar in 1994, where both of those instances are unable to take out the previous low, and a new bull market ensues. What you have is a big move to the upside, which is kind of a re-evaluation and to fair value of the dollar, because everybody becomes extremely bullish the dollar. At that point, there has to be a correction midway to the top. You have the correction, and we now had the correction in the dollar, and now we are able to move back up swiftly to the upside, most probably to 112, so $112 index, maybe even higher, we'll see. But definitely the euro is going to move. This is 25% move, 26%, and even more to the downside for the euro. So if you are a money manager, portfolio manager, it is a very good idea to cut off your losses on the euro now, if you can. So what I'm going to do in the next video, which if you don't want to miss out, you can subscribe right now, is the effect of a dollar rally on gold and silver. Many people are interested in this. I'm going to make a video what the fate of gold and silver is going to be, also other commodities and other currencies. So this is me, this is it from me, and I'm out. Bye.